Hello traders, this is Dan, and in this Master Trader Weekly Trade Review, we're going to show you a beautiful breakout, initial breakout. I'm going to teach you the proper way to trade breakouts and pullbacks, and then the concept of multiple time frames increase the probability of this setup that we traded last week. This is our technical approach to trading anything that moves. The Master Trader method starts with a compelling pattern. The arrangement and messages of the different candlesticks give us a high probability setup. Then we take that picture and say, okay, where is it in the trend? Is it on support or resistance? What are multiple time frames telling us about the probability of that moving in the intended direction? Any positive volume characteristics? Is it showing relative strength or weakness to the market and the sector? And then you just enter and manage in between. All 9 of these little candlesticks are beautiful. We call these Master Trader bullish money patterns. They're all independently bullish. And then you overlay the other concepts on the prior page to determine if we have a trade we want to enter or not. And so now this one's another one. This one's called the breakout. You have the initial breakout, which is proper on the correct setup, which I'm going to show you an example of, and we want to buy the initial breakout when there's bullish pattern continuation, bullish pattern consolidation at resistance. Otherwise, you can let it break out and you look to buy retracements and reversals on minor support, which was prior resistance. We never want to buy breakouts that travel from the bottom of the trading range through the top, because in the concept of greater than 100% retracement always suggests it's a horrible time to enter. But I'm going to show you this example where it was a correct initial breakout trade. So as I said, candlesticks, everything starts with an overall analysis of what's going on here. So TCOM here, it's in a sideways trading range mess. I got relatively flat. The blue is the 20, the green is the 50, the red's the 200. We're in a trading range. But notice, breakdown ignored, gap reversal, higher low, red bar ignored, gap reversal, 3 bottoming tails, topping tail poked its head above, came back, inside bar, higher high, higher low bar, which is a closing breakout. That is where we recommend it to our subscribers. This is a closed trade in our members spreadsheet in the members area. So this is the format we give all of our trades. We give the date, the symbol, the strategy, the technical setup, and then management, and through Telegram we give subsequent trade alerts all the way until closure. So we bought this over the high of these 2 bars. It's a breakout at the 20/50 MA, and I'm going to show you the weekly chart. And what made this additionally beneficial was on the day we entered here, where the arrow is, it had a small gap down, took out the prior bar's low, and immediately reversed. So we bought over the high, stopped under the low of this bar, we managed in between. You can actually see here it had a beautiful range expansion, wide range closing breakout. I mean, this was a small closing breakout, not what we call a potent one. This is a potent one because of the range expansion, and notice the close, which is the top of this green candle, closed above multi-week. So that's a high probability continuation pattern. We had total belief that this was going to go forward. It gapped up big the next morning, so we actually sold 1/3 of our position pre-market 28.66. So we're still holding 2/3 of a position, stop under this bar. It gapped up again the next day. We had sold another 1/3 at 30 spot 13, which is actually greater than the day's high as the market opened. And then we had moved the stop to a pivot under this bar. And then it trail stopped out the 3rd. Now I'm not showing you the broader markets, but this also showed incredible relative strength to the broader markets, which So here's the weekly chart of TCOM, and this also shows you the concept of multiple time frame alignment. Part of the concepts, which I showed you on the first slide, is whatever time frame you're trading, our approach says go up one time frame. It doesn't have to be the same pattern. It just means you want the bias of the higher time frame to be in alignment. Well, guess what? Here's the weekly chart. So obviously one bar is 1 week. So this is showing you a bunch of months. Breakdown failure, buy. This is demand. This is the stocks not going lower. This is a higher level of demand. The stock's not going lower after breaking out. And it's above the 20-period moving average on the weekly chart. So the breakout on the daily that I just showed you was also a breakout on the weekly with a price void. Price void means insignificant resistance to the left. Initial target was here, but I'm going to keep this on my watch list on a pullback on the daily because this weekly chart suggests that it could get up here somewhere at $32, $33. So beautiful example of multiple time frame alignment. Come check us out in the Green Trading Room. My partner Greg Capper and I, we start at 9 a.m. Eastern. We give a market review, our bias for day and swing trading. We go over levels and zero DTE trades for the index ETFs and futures, which is a great trade. And you can watch us implement the master trader strategy in real time. Hope you enjoyed that. Any questions, as always, email Greg or me. Look forward to seeing you in the next trade review video.